Most people fear debt, but what if I told you that the rich love it? The truth is, wealthy people don't just make money, they use borrowed money to make even more. While the average person avoids loans and credit, the ultra-rich take full advantage of good debt to invest, grow businesses, and multiply their wealth. The difference between the wealthy and the average person isn't just how much money they have, it's how they use debt to their advantage. In this video, I'm going to break down exactly how the rich leverage debt to build massive wealth and how you can do the same. Stick around until the end because I'll reveal a secret method billionaires use to never pay taxes on their wealth. The truth about debt, good versus bad. Before we dive into how the rich use debt, let's clear up a huge misconception. Not all debt is bad. Most people think debt is something to avoid, but that's simply not true. There's a major difference between bad debt and good debt. Bad debt is what keeps people broke, things like high-interest credit cards, car loans, and personal loans that don't generate income. These debts take money out of your pocket every month and don't help you build wealth. On the other hand, good debt is what the rich use to their advantage. This includes real estate mortgages, business loans, and margin loans for investing. The key difference? Bad debt takes money from you, while good debt makes you money. Understanding this is the first step toward using debt like the wealthy warmth. How the rich use debt to get richer. Now let's talk about the three biggest ways the rich use debt to multiply their wealth. The first is real estate leverage. Wealthy investors don't buy properties in cash. They use mortgages to acquire multiple properties and rent them out. This means they can use the bank's money to own appreciating assets while collecting rental income. For example, if someone has $100,000 in cash, instead of buying one house outright, they could use that money as a down payment to finance 5 properties. Over time, as the properties appreciate and tenants pay the mortgage, their wealth increases dramatically. More assets mean more appreciation, which leads to massive financial growth. The second way the rich leverage debt is through business loans. Instead of funding their businesses with personal savings, successful entrepreneurs use other people's money, whether it's through banks, investors, or lines of credit, to scale faster. For example, if an entrepreneur has $50,000, they could start small, but if they take out a $200,000 business loan, they can grow 4 times faster by investing in marketing, hiring employees, and expanding their operations. This is how the world's biggest companies scale quickly, by using debt strategically. The third method is stock market leverage. The wealthy don't just invest their own money, they use margin loans to borrow against their stock portfolios and buy more assets. For example, if someone owns $1 million in stocks, they can borrow up to $500,000 at a very low interest rate and reinvest it. This allows them to increase their returns while keeping their original investments intact. The key here is that they're not borrowing to spend on liabilities. They're borrowing to buy more income-generating assets. The billionaire secret: borrowing to avoid taxes. Now here's something the ultra-rich don't want you to know. They never sell their assets. They borrow against them instead. Why? Because when you sell an asset, you have to pay capital gains tax on the profit. But if you borrow against an asset, it's considered a loan, not income, meaning it's completely tax-free. This is why billionaires like Elon Musk and Jeff Bezos can be worth billions, yet legally pay little to no income tax. They borrow against their stocks, real estate, and businesses, use the money to fund their lifestyle or reinvest, and never have to sell their assets. Even better, the interest they pay on these loans is tax deductible. This is how the rich avoid taxes while growing their wealth. How you can start using debt wisely. So how can you use these strategies to build wealth? First, improve your credit score. A good credit score, ideally above 700, will allow you to access lower interest loans, making it easier to use debt strategically. Next, only use debt for investments, not liabilities. This means taking loans for things that make you money, like rental properties, businesses, and investments, rather than things that lose value, like cars and vacations. Third, start small with leverage. Instead of buying a home in cash, use 20% as a down payment and finance the rest. Instead of using your entire savings for a business, use a portion and finance the rest with a low-interest loan. The goal is to use other people's money to grow your wealth while keeping your own cash free for more opportunities. Another key strategy is learning the tax loopholes. If you own stocks, real estate, or businesses, instead of selling them and paying taxes, borrow against them. This way, you keep your assets while getting tax-free cash to reinvest or use. This is exactly what the rich do to keep growing their wealth while minimizing taxes. Final thoughts. Debt is a tool, not a trap. Debt is not the enemy. The real difference between the wealthy and the average person isn't just how much money they have, it's how they use money. The rich leverage debt to buy assets, grow businesses, and avoid taxes, while the poor and middle class often get stuck in debt traps from credit cards, car loans, and unnecessary spending. Now that you know the truth, what are you going to do about it? Are you going to use these strategies to build wealth, or will you continue thinking debt is something to fear? Drop a comment below and let me know your thoughts. And if you found this video valuable, don't forget to like, subscribe, and turn on notifications so you don't miss more powerful wealth-building content. Thanks for watching, and I'll see you in the next video.